Investing is about finding businesses that can make more money every year. Warren Buffett. Following this wisdom, dividend stocks have become a cornerstone for investors seeking steady income and long-term growth. As we enter 2024, identifying the top dividend stocks is more crucial than ever. In this video, we will show you the top 9 dividend stocks of 2024, each promising a strong portfolio growth. First, we'll show you some stable and growth stocks that'll help John's initial investment grow to $500,000 over time. Then, we'll present some of the very best dividend growth stocks that can add over $1 million to John's initial investment with a dividend reinvestment plan. In the end, we'll introduce a stock with the potential to grow John's $10,000 investment close to $5 million and pay over $1 million in yearly dividends. Next up, we have 9 dividend stocks arranged in order of expected long-term portfolio value growth, categorized into the $500,000 club, $1 million club, and multi-million-dollar category stocks. Let's start with our $500,000 club. Starting at number 9, we have J.P. Morgan Chase & Company with the ticker symbol JPM. This dividend king is one of the biggest global banks with assets worth $3.9 trillion and stockholders' equity worth $488 billion. With operations in more than 60 countries, the company is one of the largest financial service firms in the world. It has a current dividend yield of 2.48%, an average annual return of 11.33%, and a 10-year CAGR of 11.03%. Based on these metrics, if John invests $10,000 in this stock, after 1 year, his investment will be valued at $11,381. If he keeps this amount invested and reinvests his dividends, after 10 years his investment will be $36,353. The compounding starts around 20 years, and his investment will be worth $131,313, paying $2,706 annually. And 30 years later, his investment will be worth around $471,405, paying out $9,429 yearly or $786 every month in dividends. In total, this stock will increase his investment by $461,405, in which capital appreciation is $383,000 and value added through dividend is $78,405. Named as the top dividend stock of the Dow, J.P. Morgan Chase is a bank that has seen strong execution over the past decade plus. With an attractive investment bank, commercial and retail bank, credit cards, and wealth management franchises, its huge scale across the U.S. serves as a strong differentiator and competitive advantage. At present, it's the largest credit card issuer in the U.S., and its investment bank is the leading global generator of fees. As such, I view this stock as having it all, with a high-quality enterprise, a low valuation, and an attractive dividend yield. Next, at number 8, we have NextEra Energy with the ticker symbol of NEE. This stock has a very attractive dividend record with a massive commitment to rewarding investors well through growing payouts every year. That's perhaps not all that shocking given that it's a utility, a type of company known for paying reliable dividends. With a dividend yield of 3.05%, an average yearly return of 10.83%, and a 10-year growth in dividends of 10.98%, this stock proves why it holds this position in the list. So if John invests $10,000 in this stock, here's what he can expect from the stock. After 1 year, his investment will grow to $11,388. Projecting ahead to a decade, the anticipated value will grow to $36,750. If he stays invested for 20 years, the value of his investment will climb to $135,610, bringing an annual dividend payout of $3,734. After 30 years, his investment, thanks to strong capital appreciation and dividend growth, will skyrocket to $502,479, paying an annual dividend of $14,039, which is a monthly payout of $1,170. In total, the value of his investment will grow by $492,479, with capital appreciation of $381,390 and an additional $111,089 from dividends. This company's regulated utility, Florida Power and Light, is the largest rate-regulated utility in Florida. The utility distributes power to nearly 6 million customer accounts in Florida and owns 32 gigawatts of generation. Florida Power contributes roughly 70% of the company's consolidated operating earnings. The company's high-quality regulated utility in Florida and fast-growing renewable energy business give investors the best of both worlds: a secure dividend and industry-leading renewable energy growth potential. To top it off, the stock has maintained a consistent dividend payment record since 1986 and has increased its dividend each year since 1995, earning it the status of a dividend aristocrat, a designation for companies that have raised their dividends annually for at least 25 consecutive years. Up next is Union Pacific with the ticker symbol of UNP. This company is the largest public railroad in North America, operating on more than 30,000 miles of track in the western two-thirds of the U.S., generating $25 billion of revenue in 2022 by hauling coal, industrial products, intermodal containers, agricultural goods, chemicals, and automotive goods. In fact, it owns about one-fourth of the Mexican railroad Ferromex and derives roughly 10% of its revenue hauling freight to and from Mexico. Now, can they raise John's $10,000 investment with a dividend yield of 2.19%, an average annual return of 10.95%, and a dividend growth of 13.39%? Let's find out. After 1 year, his initial investment will be valued at $11,314. Fast forward 10 years, and it'll triple to $35,156. In 20 years, the value of his investment will reach $131,060, paying an annual payout of $3,966. After 30 years, his investment will grow massively to over $500,000, paying an annual yield of $20,098 and a monthly payout of $1,675. In total, the value of his investment will have surged by $516,189, with capital appreciation contributing $382,795 and the remaining $133,394 added through dividends. This stock has a strong track record of consistently increasing its dividends for the past 17 years, showing the company's financial stability and its dedication to providing reliable returns to its investors. With a dividend yield of 2.19% and an annual dividend of $5.20 per share, this stock is definitely an attractive option for those seeking regular income from their investments. Moreover, the company's net income for the past year stood at $7 billion, with a quarterly net income of $1.53 billion. This showcases a 7.28% increase in net income compared to the previous year. At number 6, we have another dividend king, Illinois Tool Works, with the ticker symbol of ITW. Dividend King means they've paid and raised their dividend for over 50 consecutive years. It has a dividend yield of 2.21%, an average yearly return of 11.86%, and a growth in dividends of 12.98%. So the potential is promising. Here's John's breakdown of his $10,000 over 30 years. After 1 year, John's investment will be valued at $11,407. In 10 years, it'll almost quadruple in value to an impressive $37,677. If he stays committed for 20 years, the value of his investment will climb to $145,401, bringing an annual payout of $3,465. After 30 years, the growth metrics will snowball his investment to over $500,000, paying an annual dividend of $15,309 and a monthly payout of $1,276. In total, this stock will add $566,308 to John's portfolio, with capital appreciation contributing $456,562 and the remaining $109,745 added through dividends. The company is known for manufacturing fasteners and components, consumable systems, and specialty products and equipment. Its strategy is straightforward and effective. The company's 2030 performance goals call for a 30% operating margin and an over 35% return on invested capital. It expects high margins and a high return on capital to drive 9 to 10% annual earnings per share growth, 12.98% annual dividend growth, and free cash flow over 100% of net income, which would support dividends and buybacks. These excellent goals act as a yardstick for investors to measure ITW's performance and ensure it's delivering on its promises. Next, at number 5, we have Flowers Foods with the ticker symbol of FLO. This stock has been paying out quarterly dividends to its shareholders since December 13th, 2002. Now, let's see how the next 30 years will do for John's investment in Flower Foods with a dividend yield of 4.09%, an average annual return of 0.33%, and a 10-year CAGR of 8.39%. These numbers, by the way, show that this stock is dividend-focused rather than focused on capital appreciation. If John invests $10,000 in this stock, after 1 year, it'll be valued at $10,442. In 10 years, his investment will be $18,359. The compounding starts around 20 years, and his investment will be worth $63,398, paying $9,570 annually. Further down the road, at 30 years, his investment will be worth around $759,387, paying him an annual dividend of $211,485 or $17,624 monthly. At 30 years, the total value of his investment has increased by $749,387, in which capital appreciation is $8,530 and value added through dividends is $740,857. Founded in 1919, this company is the second largest producer of packaged bakery foods in the U.S. after Bimbo Bakeries USA. While you may think bread is boring, remember what Warren Buffett would say: boring can be beautiful. According to the company's investor fact sheet, approximately 98.6% of households buy fresh packaged bread. Bread is also the #1 grocery category in weekly true profits. The products it sells are going to remain relevant and in demand by practically every household in the country for many years to come. I like industries with a slow pace of change, and Flowers' business certainly checks that box. The stock is reasonably priced today and will continue delivering steady, growing dividends for many years to come. Now let's move on to stocks that can turn $10,000 into millions of dollars. In the end, we'll show you a stock that'll make John a multimillionaire and build a portfolio value of around $5 million. Number 4 on the list and first $1 million goal stock is Texas Instruments with the ticker symbol of TXN. This is a global semiconductor company known for designing and manufacturing processing chips. Their chips are key components in almost all devices, including smartphones, cars, industrial equipment, and consumer electronics, enabling functions like power management, data conversion, and signal processing. So, can these chips boost John's $10,000 investment with a dividend yield of 3.16%, an average annual return of 14.24%, and a 10-year dividend growth rate of 16.72%? Absolutely. Here's the breakdown. After 1 year, John's $10,000 will be valued at $11,740. After 10 years, it will five-fold to $51,357. In 20 years, the snowball effect will massively grow his investment to $286,577, paying an annual dividend of $12,093. Should John commit to 30 years, his investment will balloon to $1,776,264, yielding $94,652 in annual dividends, or $7,888 monthly. In total, the value of his investment will have gone up by $1,766,264, with capital appreciation accounting for $1,259,361 and the remaining $506,903 added through dividends. Keep in mind that companies like TXN have a unique advantage. They handle both the design and manufacturing of their chips, ensuring a tight grip on quality and customization. Meanwhile, companies like Broadcom and NVIDIA depend on external manufacturers like TSMC to bring their designs to life, which adds risk and complexity to the supply chain. This means TX, as a semiconductor company, can hold most of the market share in its industry. Also, the company manages its expenses quite effectively. The manufacturing and operating costs aren't overly burdensome, allowing a significant portion of the gross profit to translate into net income. This points towards a highly profitable business model for the business. At number 3, we have everyone's favorite, Home Depot, with the ticker symbol HD. It is the world's largest home improvement retailer, offering a wide range of products and services for homeowners, contractors, and professionals. Charlie Munger believed that Home Depot had a strong competitive advantage in the home improvement industry and a long runway for growth, and Home Depot has proven that. And when looking for a stock to buy and hold forever, the essential characteristic to look out for is a competitive advantage. A fundamental reason a business is capable of beating back its rivals. Home Depot is one dividend stock that fits that mold. The type of products the company sells makes it difficult for outsiders to take a meaningful market share. That has helped Home Depot to grow revenue at a compound annual rate of 7.7% in the last decade. More importantly, operating income jumped from $9.2 billion to $24 billion between 2014 and 2023. Home Depot's strong business performance has helped support big payouts, with a dividend yield of 2.41%, annual return of 15.55%, and dividend growth of 18.28%. That means if you bought Home Depot stock in 2014, your dividend per share would have increased roughly five-fold. So how much can John earn from this stock? Based on all the metrics, if John invests $10,000 in this stock after 1 year, his portfolio will be valued at $11,796. The same portfolio after 10 years will be valued at $53,587, more than 5 times the original value. Give it 10 more years, and in 20 years, it'll be valued at $308,298, paying an annual dividend of $10,366. It gets even better from here. If John decides to hold on to his investment for 30 years, he would become a millionaire, as his investment would now be worth $1,945,112 and pay him $84,736 in annual dividends, or $7,061 each month. In total, this stock will add $1,935,112 to John's portfolio, and it checks both boxes, as it's both a dividend and a growth stock. And if you think this is good, wait until the last stock, which pays over $1 million in dividends every year. But first, our second to last stock is Bank OZK, with the ticker symbol of OZK. This company offers a wide range of retail and commercial banking services, but principally concentrates its activities on real estate loans, which account for the great majority of the bank's loans and leases. The bank's real estate lending arm, which finances many metropolitan construction and development projects, extends further than many of its community banking competitors. Let's see how OZK does for John's $10,000 investment. With a dividend yield of 3.29%, an average annual return of 4.81%, and 10-year dividend growth of 13.97%. After 1 year, the $10,000 investment will grow to $10,810. In 10 years, his investment will be valued at $25,562. 20 years down the road, his investment will be worth $121,524. From there on, the strong dividend growth of 13.97% snowballs into John's portfolio. At 30 years, his investment will be worth $2,215,273, paying him $631,453 yearly. This means this stock will add $2,205,273 to John's portfolio, in which capital appreciation is $287,478, while value added through dividends is $1,917,795. Now that is a financial journey worth taking. This stock is a bank holding company which owns and operates a community bank, Bank of the Ozarks. The bank operates offices primarily in the southeastern United States as well as Texas, New York, and California. It provides a wide range of retail and commercial banking services, but as mentioned earlier, principally concentrates its activities on real estate loans, which account for a great majority of the bank's loans and leases. Considering their consistent dividend payments, robust dividend growth rate, conservative payout ratio, and solid growth metrics, the company presents an appealing case for value investors focused on dividend income. And now, topping our list of the top 9 dividend stocks for 2024 is T. Rowe Price Group, with the ticker symbol of TROW. This company provides asset management services for individual and institutional investors. It offers a broad range of no-load U.S. and international stock, hybrid, bond, and money market funds. Before showing you what this stock can do for John, let's see why it's at the top of the list. T. Rowe is one of the many attractive dividend stocks you can find. The asset management company, which runs the Rowe Price family of investments, has all the attributes of a great dividend stock. It has raised its dividend each year for the past 36 years. Only a few dozen stocks called Dividend Kings have longer streaks. Given its consistent dividend payments, robust dividend growth rate, and strong profitability, it presents a compelling case for dividend-focused investors. You really can't go wrong adding it to your portfolio as a dividend stock. With a dividend yield of 4.45%, an average annual return of 3.34%, and a 10-year dividend growth of 12.37%, this stock checks all the boxes of a worthwhile dividend stock. Let's see how John does with this investment. After 1 year, his investment will grow to $10,779. In 10 years, his investment will increase by 150% to $26,169. If he holds this investment for 20 years, it'll be valued at $153,429, paying an annual dividend of $27,932 or $2,328 per month. From here, the snowball becomes enormous as dividend growth of 12.37% starts taking effect. Check this out. With dividend reinvestment, after 30 years, John's investment will grow massively to $4,828,047 with $1,669,065 in annual dividends. This stock will add over $4,818,047 to his investment, in which capital appreciation is $337,783 and value added through dividends is $4,480,264, making it a no-brainer, top-of-the-list, long-term dividend stock for 2024. Thanks for watching.